Good morning, trading world. It is January 11th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY ETF. All right, let's get into or go back to the analogy of comparing the market to a person running. Because as in the title of today's analysis, it is another lap around the block. We continue to run laps around this same block, building endurance so it can run further. It may look like a bounce, but unless we close above 479.98, we are still consolidating. And in that analogy a while back, I used consolidating as to the point of a runner catching his breath or resting. The way you would, in between laps, you double over and put your hands on your knees to take in more breath. That's what the market is doing right now. Now, the keys to watch for today will be cycling of time frames, or what time frame has the juice. Now, a lot of people, it's very simple, but a lot of people just forget to do this. We get stuck in that time frame that we're currently watching. And in doing so, we kind of mess up or wonder why certain things happen. And that certain thing is like you've been watching a price level on a certain time frame, knowing price is at an overbought condition, and you're expecting the reversal, so you're ready to jump in short at this specific price level, and then boom, it keeps going right through that price level, knocking straight through your stop. And it keeps going, disregarding the pattern that you had saw building and everything. Usually what has happened is that you didn't follow the time frame energy to the right time frame. If you're using a RSI on a lower time frame and it is at an overbought level in which you are waiting for the reversal, before you enter the position, go up a time frame. If the next higher time frame is neither in the overbought or oversold area, it is likely that the trend that you're watching on the smaller time frame is going to continue through that level you're watching instead of reversing. We'll go back and take a closer look at that here in just a moment. All right, let's go ahead and jump into the key levels of the day, and I'll come back to the time frame cycling. All right, coming into today, starting off on the resistance side, the Jack resistance level is going to be 466 through 467. The Queen resistance level is going to be 468 through 470. And the King resistance level is going to be 471 through 474. On the support side, we have the Jack resistance level at 465. The Queen support level is going to be 462 through 460, and the king support level is going to be 458 through 455. Now, the battleground to go lower will be this 464, below this 464 area. So if we drop below 464, we're definitely going to see somewhere in the neighborhood of 462 to 460. But if we hold that 464 area, we should definitely look to go higher. One of the things that we're going to look at is the time frame that's in control right now, and this happens to be the weekly time frame, and that's the reason that, or maybe the only reason, that we get limited upside today. The weekly time frame is actually, it's not negative, but it's at a point where it's trying to find its next trend. So it's not an uptrend, it's not a downtrend, it's just trying to find the new trend. So in looking at that, the most probable outcome for today is that of a uptrend day. And how we're going to identify that is the closing from yesterday is going to be very important. We had a close of 465.51 yesterday. So if we mark that close of 465.51, it's not the easiest to write, and as a matter of fact, we're not going to attempt to do that. But let's look at let's mark this as the previous close. So in order to see this trend day, what we want to see is that by the time the opening comes, we want to see a fade back to kind of test, and as a matter of fact, close the gap from overnight, going back toward this 465.51. But somehow, either before we get to it or right when we get to it, we want to see the market find support. So coming in, we find support there, and then from that point, boom, we should get the takeoff. Back up into 467 easily, and we should continue up somewhere toward this 468, 470 area. And at some point, we're going to find ourselves in what I like to call the midday chop. And after finding our way back and forth through the midway chop, The second half of the day, we'll probably get a head fake to continue, and then a light fade into the close. And that in itself is the anatomy of a trend day. That's the map that I'll be looking or planning for when it comes to today's price action. And when we get these trend days, you take advantage of the first half of the day. This is where you're going to get long with your, it may be possible to do straight calls, but I don't recommend it because still it's such a high VIX. The juice can be sucked out of those calls pretty fast with a falling VIX, so I recommend doing call spreads where you're going to buy the low strike or buy support at this 465 and sell the target, which is going to be 468, 470, somewhere in there, possibly even 471 through 474. So that's what I see as the most likely or most probable price action today. However, this is where we want to go back and keep an eye on the time frame cycling, because it's going to be very important coming into the end of the week, where we have earnings coming in, and not just any earnings, but it's going to be the start of earnings for the financials. And if we think back to Monday, Monday gave us a sneak preview of what could happen when financials blink, and at the same time, big tech continues its tantrum. And if that scenario lines up again, we'll find ourselves quickly below 455. So that's going to be what I'm looking for to play out. So in a likely chance that financials blink, and we have a scenario where buy the rumor and sell the news happens in the financials, today and tomorrow are going to be one of the best days to get short for a swing trade that we've ever seen in a long time, if those conditions line up. So that's one of the important things that I wanted to recognize as of today. This trend up day being the most likely scenario. However, if we don't get the trend up day, I still look forward to us having a range day to some degree with a bias, a bullish bias to it. And the price action for that would be similar to this, but we would probably get a spill out back below the close, and we try to come back up and find a high, dribble back down, and then all of a sudden we get a pop, or we push the boundaries higher to come back low to that. And that's going to be how price action would play out if we don't have the trend up day. Now, the other thing to keep in mind, there is another variation of the trend day, in which I call the change day or rounded reversal day. And with that, it's usually a little easier to spot, because what will have happen here is that fade back to the previous close is usually avoided, and we take off like a rocket from the opening. And we'll take off like a rocket, we'll find the midday chop, and then the same amount of energy that we used in the beginning of the day going up, we usually have that same energy coming down. This would be the rounded reversal, or as I like to say, the change day. This is also a possibility of happening today. However, I think the highest probable price action is going to be the trend up day. But you have to condition yourself for these options and be prepared. So that as soon as you recognize the certain qualities that come along with each day, you know how to react. The other thing that we also keep an eye on this change day or rounded reversal day is that internals are going to have a strange divergence to it. From the moment we take off from the opening, if you pay attention to either internals or whatever indicator you're watching, you're going to get a divergence where price action is moving up, but there's going to be an ever so slightly divergence of your indicator going away from price action. And that's going to be the key telltale for the rounded reversal day. So now that we have all of that out of the way, let's go back to the time frame cycle. All right. I've gone and put up two charts side by side, 1 year daily and a 90-day 4-hour chart with the same exact indicators, so that we can kind of pay attention to what happens when the energy is being passed off from a different time frame. And in fact, this is going to be a key thing to watch this week. I've already given you the clue that the weekly time frame is the actual time frame that is in control. However, the time frames below the weekly will still cycle, and this will give you your rhythms or how things happen at certain decision levels. So again, knowing that the weekly is the time frame that's in control, we want to watch the cycles of the charts below the weekly. So watching the 4-hour chart, we're going to watch the RSI. we want to see when or if the RSI can break the midway point here and where it stops at as far as getting back to a overbought condition. Nothing's at a overbought condition. And in fact, this midway point is going to be very important, finding out whether we can break the midway point. So that's the first step, is seeing whether we can break through that midway point. And you can do the same thing with lower time frames and going back and watching those as the 4-hour bumps its midpoint. Now, as we watch for this midpoint, let's say it does break through and we go up to this overbought area. The moment the 4-hour enters the overbought area, you want to watch the daily, especially before you take any positions. You want to watch and see what is going on with the daily RSI and whether it decides to react. Because if it reacts while the 4 hours is in its overbought area, if it starts to move, then you know that with a move up going towards its overbought area on the daily, you know that energy is being passed off to the next time frame. It's being passed off to the daily. So this in fact acts as a condition and could stay here for a long time. And the reason being is we're waiting for the daily to catch up and become overbought as well before we have to make the next decision and look at the next time frame. So that's going to be very important this week in watching whether we get this 4-hour up here or whether it breaks the midpoint and we're able to go back to overbought condition. And this is going to be key to where if you can watch this correctly, this will keep you from being chewed up and seeing a decision level and seeing a pattern and watching that pattern, knowing that it's about to reverse, and then somehow it shoots opposite of what you were thinking, and instead of reversing it, it chews straight through your stop loss and continues up in the same trend. So that is going to be key today in seeing what happens. So as always, especially in these volatile conditions, always define and know your risk, and profit will come. Wishing you a successful trading day. Have a great one.